when I do my research to educate myself so that way I have an idea of what's being talked about, what's being predicted, I'm looking at what's the next 12 months of the housing industry and frankly the mortgage industry. What kind of transaction counts are we going to see? What are we predicting? And I realize this is all a gamble, right? It's a prediction, it's a speculation. Nobody ever knows what tomorrow is. And what's so funny about it is I notice in these articles that we're always comparing to a year in the past, right? So I read one this morning that said, well, compared to 2019 volumes, and let's pause there for a second. The reason that article, in my opinion, was using 2019 is because that was before the anomaly of COVID, which we can all agree was very unique and likely will probably never happen again. So they're using 2019. Well, I was doing mortgages in 2019, and guess what? Those articles were comparing the normal to years before that. So I started asking myself, what is normal, right? Do we even know what normal is? And I think that as a consumer, what we do is we try to time things. And that's a smart thing. That's our brain saying, let's protect ourselves. Let's make the best decision possible. Let's try to time this next big decision. The problem is, if you talk to anybody in the financial world, whether it's a stock trader or someone in the mortgage business, they'll tell you trying to time a market, frankly, is impossible. It's not like it can't be done, but it's a very dangerous gamble to do. And so then I take that and I say, okay, well, what is my risk, right? Because making a decision means weighing your risk. And all I can do is take the information available to me today and make the best decision possible for tomorrow. I can't predict what's going to happen tomorrow. And I don't really care about yesterday or what was happening in the normal markets before because that's in the rearview mirror. So I just simply took a $500,000 loan amount and I did a 6.5% interest rate, and then I did a 6% interest rate. And the reason is national average at the time of me filming this is around 6.5% on a 30-year fixed. Fannie Mae, one of the big agencies, is predicting, doesn't mean they're right, that by this time next year, rates will be at 5.9% as an average. So it's about a half-point difference. So I did that in a real-life scenario, and the difference in payment was $163 a month. I can tell you, I've talked to enough consumers over the last 20 years to know that regardless of whether you're a first-time home buyer or it's your 10th home and 10th transaction doing this, most likely if you need to move, right? I had an extra kid, I need a bigger house. I'm retiring, I need to downsize. $163 a month difference on your payment is not going to be a needle mover, and that's not going to make or break your decision. So I think that the way to move forward is we have to educate each other. We have to ask the right questions. We have to work with professionals who know the right questions for us to ask because we don't always know. And money is important, right? That difference in payment, I'm not saying those dollars don't count. What I'm saying is you have to take that into consideration, and really what we need to do is stop being hyper-focused on things that don't really matter, right? What's the future going to hold? What's the Fed going to do with rates? What are interest rates going to do? So I really think that we all have to take a deep breath. We have to calm down. Uncertainty makes us uncomfortable, but guess what? Uncertainty has existed in the world as long as I've been around and probably always will. So let's just calm down, try to make the best decision, and we move forward.